Good day, YouTube. This is Jay Money with Fallingford Financial. I talked a lot about dividends on the channel. I'm pretty sure I've talked about all three of these. One of them quite a few times. The other two, a couple times, but not as much as Verizon. But this is 3 cheap dividend stocks to buy today. I kind of like to do growth stocks as well as dividends. I kind of like to see the passive income. You might be able to make more money on some growth stocks, but I like to diversify into kind of a little bit of everything, so that's why I do dividends and growth stocks. And for the most part, I have a good return on both, actually. So some growth that I'm thinking of is like Apple with a little bit of a dividend, so those are even a good option. But this is 3 cheap dividend stocks to buy today. As you can see, just dated as of yesterday. So Verizon, Blackstone, and Walgreens. So dividend yields over 5% are a great reason to buy these stocks. Dividends are a great way for investors to judge how much money a company is able to willing to return to shareholders each year. Finding stocks with a strong cash flow and a solid dividend can also be a great way to find market-beating investments. 3 companies built for any market environment is Verizon, Blackstone, and Walgreens, and they pay dividends that exceed 5% yield. So first is Verizon, currently at $43.25. Market cap of $182 billion. I've talked about this one quite a few times around the channel. Not probably as much as AT&T, but I have building up my portfolio of shares for Verizon, so building up that position. So days range $43.24 to $43.70. This used to be a $50 stock, $55 I think at one time. So in these $40 ranges, it's hard not to buy it. So, and right there, as you can see, $43.22 to $55.51. So if you can get in at these prices and then it runs up to that and still get that dividend, so that's a kind of a sweet spot there. So it'll go back up. Volume of 16.7 and average volume 19.1. So wireless is a great business for dividends. Like I said, I've talked about Verizon, AT&T quite a few times. So there are only 3 major wireless providers in the United States, and Verizon is one of them. Company has a premium position in the market, leading position 5G cellular networking. Investors have been concerned by Verizon's losses in the lower end of the market after buying a TracFone. But the future of Verizon isn't fighting for low-end customers. It's keeping high-margin wireless customers and adding in-home wireless broadband customers, which Verizon calls fixed wireless. In the second quarter, a company added 256,000 fixed wireless customers, and it can now start to bundle its service to give customers an even bigger offering. Streaming content could be the third leg of the new triple play and includes wireless and home broadband. Verizon's 5.8% dividend yield is high for today's market, given the allotment for the company is in for wireless service in the United States. I like the value in its future. So next is Blackstone, ticker BX, currently at $98.55. $115 billion market cap, days range $98.41 to $105.63. So you could get a $5 to $6, $7 trade in there if you traded at the low and got it at the high. The 52-week range is $86.97 to $149.78. So it'll probably get back up to that level at some point. Volume of 5 million, average 3.7. Blackstone is an industry leader in private equity and alternative investments that gives investors exposures to both fee revenue and performance-based revenue, but the end goal is increasing assets under management. Total assets under management increased 38% to $940.8 million in the most recent quarter, despite the down market. That's because it had $88.3 billion of investment inflows in the second quarter of 2022 and $339.7 billion coming in over the past year. As investors search for a yield from all types of investments, Blackstone's funds have found an even wider audience. The dividend yield of 5.8% is solid among financial companies. Private equity and real estate business may go through some ups and downs, but this market leader with a strong dividend, and that's why it's a top pick. Next is WBA, Walgreen Boots Alliance, currently at $36, $31 billion market cap, days range of 36 to 36.99, 52-week range of 36 to 55, so it was a $55 stock at one time, volume of 6.9, average of 6.2. The convenient pharmacy, is there anything that's going to disrupt Walgreens, a current pharmacy and convenience store business? The company is a valuable real estate across the country, ties with insurance companies and doctors difficult to break, and it's a go for a shop for millions of customers looking for quick shopping. There are potential threats from online pharmacies and telemedicine, but these services have taken a lot longer to take market share than many investors thought. Even if they do grow, Walgreens could move into the online pharmacy services and will always have the convenience factor over upstarts. And if they haven't done so already, they need to move more to online because that's where everything is going. The business may not be in high growth, but its dividend yield of 5.2% is enough to make it an attractive stock. Moats and dividends to hold long term. Each of these companies is a market leader, which gives them a moat that would be very hard to disrupt. That's what drives the financials that enable the dividend yield over 5%, and that's a great reason to buy and hold these long-term stocks. So I have two of them. I would have to double check one of my accounts, but I'm pretty sure I don't have any BX. There's another stock, Blackstone, I just can't say the name of it or the ticker, that I do have, but I have quite a few shares of Verizon, a little bit of Walgreens. I'd like to build that position a little bit more, but telecommunications is kind of where my money goes, AT&T and Verizon and some other stocks, but Walgreens, not to discount it at all with the lower price that it's currently at and an attractive dividend yield. There's always going to be room for Walgreens to grow, and it's a business that's never going to go down or for fear of losing money, so that's how I look at it, but don't take my word for it. Do your own due diligence, and again, I don't give tax, legal, or trading advice here on the channel, just state my opinion. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.